Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. We've seen quite a bit of volatility this year, really more so in the last 30 days. And I've had a number of clients and also questions on my TV and radio show. What causes all that volatility when you see these big spikes, 8-10% swings? Now, I've been managing money for over 33 years, and I've seen volatility. But the last 30 days or so, the volatility really has been quite high. The reason for that is really liquidity issues, not only around the equity market, but a lot around the bond market itself. And that's why the Fed has come in and really added liquidity, meaning they're buying bonds so they can basically liquefy the market. This volatility has come down quite a bit. And from what we're seeing on the VIX, which is a measure of risk and volatility, we'll probably see between 2 to 3% swings either side of the fence, probably for the next 30 days or so. Certainly not what we've seen the last 30 days, but going forward, we should see less volatility. I'm also asked, Brian, who is actually doing all this selling that creates this market to come down like this? It is not you, the small investor. This is Wall Street, hedge funds, people that had margin going and massive margin on positions that are basically liquidating on the wrong side of the markets, whether that's the bond market, the equity market, or the wrong asset categories. So it's not the small investor liquidating. This is really major institutions doing mass liquidations that cause this kind of volume and this kind of volatility. As I talked, my last couple updates, I did mention we are in a mild recession for the first quarter simply because of these shutdowns. And the second quarter is going to be a more severe recession. We feel this is already baked into the situation and what we're going to see overall in the overall markets. As we go through the second quarter of this year, we're really now geared up for the third and fourth quarter. We are properly positioned. We'll be making a few subtle changes over time, of course, but we feel we're properly positioned when we get back into a growth mode the third and fourth quarter of this year, and certainly a much better year for growth in 2021. So while this recession came hard and fast, this is not a normal scenario. Most recessions come from an overheated economy and either consumers and or businesses overspending and over leveraging. That is simply not the case when we went into the last 2 or 3 weeks. This has been caused really from a medical situation, and really not only our country but other countries around the world that have basically stopped people from going out. This is going to have obviously an impact on consumers spending and also business spending, and that's one of the reasons why you're going to have a mild recession this first quarter, kind of a pullback, and certainly a much larger recession in the second quarter. But again, from what we see based upon pullbacks, we feel that we've already kind of baked that into the situation. Investors need to realize markets do not go up when it's all clear. They often go up in the worst part of the news, when it looks the worst, when the headlines look awful, corporate profits are dropping, major recession coming. That's often when the markets start rebounding. But that's often the point where investors who are maybe a little bit more emotional and nervous actually do the selling, which is sad. I'm glad to say 98% of our clients stayed on track and allowed us to do our job, and you hopefully will be well rewarded, not only the rest of this year, but as we go into the next 3 to 5 years. The U.S. economy, in our opinion, is going to be the strongest economy in the world again very shortly, and certainly because of supply chains coming back to the U.S., or some of those over time, with more travel being done in the U.S. and less people traveling outside, the U.S. economy should come back quite strong. This will give us, in our opinion, more financial security, better growth potential long term, more jobs, higher wages, all the things that really will benefit not only the U.S. consumer, but businesses. Now remember, we're going to continue to have some volatility. I don't see the all clear on volatility now, but I do see more upside as we get into the second half of this year. We're properly positioned. We'll make adjustments as necessary. But as always, if you have any questions, if you have any concerns, please call the office. We love to talk to you to make sure you're feeling comfortable. If we need to make adjustments based upon your risk profile, we can do that. But again, panicking, making emotional, rash decisions is never a smart strategy. and can be catastrophic to your long-term goals and objectives. We appreciate your business and, of course, your trust, and please do call us if you have any questions or concerns. Make sure you have yourself a safe and profitable day.